I think one of the pieces of the points of information or points of data we find interesting. We've talked about inventory for 3 years, but we look at existing homes sold across the country, and we look at new homes sold, and we look at actual, and we look at projected. We had a chance this past Monday to take a look at the NAR projection, which would be National Association of Realtors, as well as the mortgage bankers. And while we are experiencing some inventory challenges, 2018, 5.4 million existing home sales, 600 plus thousand new home sales, the same projection for 2019. So while we're being constricted from the available inventory, it doesn't appear overall that the sheer volume, or excuse me, the sheer units of both existing and new are going to be adversely impacted to the same degree, which really speaks to the concept that we believe is kind of a tale of two markets in each and every unique market that exists out there. And, we would be remiss if we didn't remind all of our viewers that, the importance of understanding the hyper-local nature of our markets. As Boomer said, we span from New Jersey to North Carolina and west to the mountains and east to the shore. And every market has its nuances and its uniquenesses. That we believe more than ever the real estate professional that represents Long and Foster is perfect to come out and play that role in helping navigate through the uniquenesses of that. So let's jump off of inventory, because the other, we talked about headwinds and tailwinds. A lot of tailwinds, and one of the tailwinds, Boomer, is price appreciation. We would call it steady and healthy. Let's talk a little bit about home price appreciation.
Yeah, so when you look at nationwide, and obviously it's different in different areas, real estate is hyper-local, but when you look nationwide, home prices have appreciated at a little bit over 6% throughout the course of this year, which is obviously very positive. It's not hyper-growth, which we saw in the early 2000s, which ultimately led to some challenges going into the Great Recession. But appreciation has been very healthy. It's actually outpaced wage growth by double, because as we said earlier in the podcast, wages have gone up about 3% over the course of this year, while appreciation of homes have gone about 6%. When you have those two things combined with interest rates grinding higher, we're going to start to see some affordability challenges. I don't think there's any doubt about that. So, as we move into 2019, we do think that those entry-level price points will continue to appreciate at a pretty significant clip. But overall, we believe you're going to see a flattening of appreciation in 2019. And if we were to guess, you're going to probably see, if you just take the market as a whole, somewhere between about 1% and 3% appreciation. That doesn't mean you're going to see that at every price point, which I think is going to be one of the challenges, because sellers will read in the news of what homes are appreciating at, but when you get up into the higher to the luxury market space and some of the higher priced homes, those homes have already flattened. A lot of those homes have already flattened, and I was talking to some agents last night at an event in DC, and a lot of those homes have actually come down in price. So it's going to be an interesting marketplace, and very price point specific, as is every marketplace in real estate going into 2019.